Welcome everyone to this Wednesday edition of Inside India. I'm Sri Jegarajah. Let's take you across today's headlines. US Treasury Secretary Scott Bessent accusing India of profiteering from Russian oil, drawing a distinction with China.
India is just profiteering, or they are just profiteering. They are reselling. They've made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing.
The US Commerce Department hiking steel and aluminium tariffs on 400 more product categories, including appliances and EV parts. And ChatGPT rolls out its cheaper Go model, with India getting first dibs as OpenAI looks to gain a bigger slice of the pie in the country. Welcome to the programme. Let's take a look at the regional markets first of all, and mainly a negative and quite a wide spread of dispersion. If you look at the TAIEX, which is the loss leader at this point in the regional markets, down by a heavy 2.4%. On the other side of the ledger, we've got the Australian and the New Zealand benchmarks performing relatively better. New Zealand is up by 1.5%. Australia is up by just under 0.5%. And elsewhere, if you take a look at the Chinese markets, again, some dispersion there. From a Greater China perspective, Shanghai Composite up by 0.3% and the Hang Seng down by 0.4. There's some underperformance going on in the Southeast Asian markets too, although it seems to be relatively contained as far as the scope of losses are concerned. Indian markets join us in about 45 minutes' time. Here's what Gift Nifty futures are projecting. We are looking at 24,969 at the open, so that would be relatively steady if that number does materialise, given where we left off yesterday, which was 24,980. Let's give you the exchange rate too. Dollar India rupee at 87,109. The latest on the trade front, the US is expanding steel and aluminium tariffs to include over 400 new products, covering everything from wind turbines to bulldozers to motorcycles and EV parts. These products will face a 50% tariff on top of the existing country rate. And after India claimed to be singled out for its Russian oil purchases, US Treasury Secretary Scott Bessent has now explained why the administration is targeting New Delhi. Bessent says India is, quote, profiteering, buying cheap Russian crude and reselling it at a profit, with the gains lining the pockets of some major families in India, according to what he says. And let me just also add, gains lining the pockets of wealthy Indian families is what he said, telling CNBC it's not the same as what China is doing.
Pre-22, pre-invasion, 13% of China's oil was already coming from Russia. Now it's 16%. So China has a diversified input of their oil. If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42%. So India is just profiteering, or they are just profiteering. They are reselling. They've made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing. Like this India, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
And after Peter Navarro's op-ed in the Financial Times this Monday, it really looks like the administration is doubling down on its position on India. Speaking of which, India overtook China as the biggest buyer of Russian seaborne oil this year, but last month pulled back its purchases. Traders say China is stepping up to buy Russian oil in India's place and bought 15 cargoes due for October and November delivery. In the meantime, a lot of news flow associated with India-China relations. And on that front, Chinese Foreign Minister Wang Yi met Indian Prime Minister Narendra Modi in New Delhi on Tuesday. Prime Minister Modi saying the two countries have made steady progress in their ties since last year. Both sides also agreed to resume direct flights at the earliest and step up trade and investment flows. Wang Yi also met India's National Security Advisor and Foreign Minister earlier, all this ahead of Prime Minister Modi's visit to China at the end of this month for the Shanghai Cooperation Summit in Tianjin. And my colleague and our China correspondent Elaine Yu joins us now to give us Beijing's perspective on this. It's fascinating, isn't it, Elaine, how once strategic adversaries that are divided, still are divided on a number of issues, seem to be more closely aligned now.
For sure, Sri, and this is Wang Yi's first visit to India in more than 3 years. So this trip does lay a stronger groundwork for when Modi visits China later this month for the SCO summit. And China says it attaches great importance to Modi's attendance at the summit. And the backdrop to all this, of course, is the deteriorating ties between the U.S. and India, which is something Beijing would welcome. But we've also seen Chinese commentaries suggesting recently that India improving ties with China is partly forced by the volatility in U.S.-India relations. But nonetheless, the two sides also did agree on managing and de-escalating border tensions, which have been a key flashpoint that sent relations between the two countries to historic lows starting 5 years ago. And we've seen Wang Yi using very positive language surrounding the border tensions. He said the setbacks in the past few years were not in the interest of the people from both countries. And he said, we are heartened to see the stability that is now restored in the borders. And also Wang Yi will be headed to Pakistan after this. But given the tensions between India and Pakistan that has escalated recently, no doubt India will be watching very closely how China handles its relationship with both India and Pakistan, Sri.
It's going to be incredibly challenging, especially considering in the recent conflict, Operation Sindoor, it was Chinese-made Pakistan Air Force jets that reportedly shot down an Indian Air Force jet. Elaine, we're also hearing reports that China has revoked a ban on rare earth exports to China. Tell us more, and could rare earths be a central component of any potential deal further down the road?
Yeah, and China's foreign ministry was asked about these reports, saying China could lift restrictions on these rare earths. And the ministry spokesperson said they are not aware of the situation, but he also added, we are willing to strengthen dialogue and cooperation with relevant countries to ensure the stability of global supply chains. It is not inconceivable that they would do this, given China has worked with Europe as well to fix bottlenecks in the rare earth supply chains, but it would be a hugely significant gesture from China to do that for India, which is something Modi has called for, and something that would really help India's EV industry and clean energy ambitions as well. But just to throw in a bit of complication in there, BYD has been struggling to expand in India, and its executives have been unable to get visas since the deadly border clashes 5 years ago. But the countries also from this trip did agree on facilitating visas, including for business people. So we'll see if there's any easing of barriers for BYD's executives in the future, and also if China does resume these rare earth exports to India, which would be a big move.
Yes, and there is a potentially significant EV market in India, given Narendra Modi's vision of 30 by 30, 30% EV penetration by the year 2030. Elaine, thank you very much indeed for that. Let's continue talking about critical minerals and bring in Saloni Sachdeva-Michael, energy specialist, India Clean Energy Transition at the Institute for Energy Economics and Financial Analysis. Saloni, thank you very much indeed for joining me. Let's start with this issue of rare earth minerals, which is such a geopolitical hot potato. India and China, yes, we know that they've been pursuing closer ties because the US relationship seems to be lurching from bad to worse. But can we say a rare earth mineral deal could emerge out of all of this?
Thank you so much for that question. Maybe I'll just step back and start by saying that rare earths are the backbone for the modern economy, and we know that they're useful for the manufacturing of electric vehicles, other clean technologies, and not just for that, but also for domestic manufacturing of medical equipments and semiconductors for the defense industry. So yes, it is important, and this deal is also very important because unfortunately, even though India holds significant reserves, which is approximately 7 million tons of rare earth elements, we do not have any production capacity for now. It is almost negligible,
Yes.
less than one. So there exists a huge monopoly with China controlling more than 60% of the mining of these rare earths and more than 90% of the processing of these rare earth elements. And having said that, this ban shows how the country is now using this monopoly as a strategic diplomacy tool. So going forward, deals and partnerships with China is important, and the recent negotiations few days back between the External Affairs Minister, Mr. S. Jaishankar, and the Chinese Foreign Minister, Wang Yi, have been a welcoming step. And I think these were a follow-up to the previous negotiations that happened in July, where China also put forward its ask. So I think it's like a mutual cooperation where, yes, India is requesting for lifting of bans, but in panel, China is also putting forward their ask in terms of permissions to set up plants in India, free
Yes.
trade movement, the Hong Kong colleague was mentioning, and also ensuring that the border disputes do not derail the trade engagements going forward. So, and having said that, these deals are not just important for rare earth elements, but also for the fertilizer industry and the tunnel boring machines, because we have seen bans on those also. I would also want to highlight that this comes as a really nice opportunity and a positive for the auto industry in India, because that was the industry that was most impacted with the bans of minerals like neodymium and dipsorium, which are crucial for manufacturing of EV motors and the magnets. Even though in India we do a lot of assembly, but they form a crucial component, and it impacted the EV industry drastically in India. Not just the EV industry, but also the broader automakers like conventional automakers like Maruti, Tata, Bajaj, who also got impacted. So yes, a positive development, but it is still unclear if Beijing will grant like faster approvals going forward, or it would like be a blanket exemption for the elements. So how the negotiation will be converted into actual on-ground impact is something that we'll have to look forward in the coming months.
Thank you for that, Saloni, and especially when there are so many geostrategic issues that need to be overcome in the India-China relationship. And of course, there are issues on New Delhi's side related to China's support and alliance with Pakistan. The reality is India, as you quite rightly pointed out, does have access to rare earth minerals, but not the capacity to process them into the materials that, again, you mentioned, that are used in so many critical industries and applications. How long will it take India to develop this capability?
It's a tricky question because it involves a lot of short-term, medium-term, and long-term actions. At IEFA, we have undertook analysis, and we strongly believe that it will require like a prolonged strategy which sits at a number of pillars. Maybe the first one starting with, we need domestic incentives for manufacturing, extraction, and refining in India. So very recently, the Central Ministry introduced the production-linked incentive scheme for incentivizing magnet manufacturing, and an earmarked amount of rupees 1,345 crores was promoted for domestic manufacturing of magnets. The scheme also focuses on building separate processing capacity, but the actual implementation or the rolling out of the scheme will take time. So I think in the next 3-4 years, we are hoping that we will see on-ground establishment of both exploration sites in terms of rare earth magnets and also the capacity of processing them. Another key element that I would like to highlight is having now the presence of structured frameworks in India with the National Critical Mineral Mission being announced. So back in 2023, Ministry of Mines came up with the 30 critical mineral list and rare earths were a part of it. Followed by amendments to the mineral and partnership agreements, the minerals regulation in India, and now the National Critical Mineral Mission, which
Yes.
focuses on developing the long-term vision of diversifying the critical mineral supply chain in India. And
Yes.
I'm really hopeful that the mission now also mandates the Geological Survey of India and assigns it with the responsibility of undertaking domestic exploration for new 1,200 sites. So I think that's a good.
Thank you for that. So ultimately, if India's aim with critical minerals is to be self-sufficient in the longer term, then where is India on that path towards a self-reliance? And should the formation of a strategic stockpile be central to that policy objective?
Yes, I think we are on the right track with the domestic policy in place, and also along with Kabul, which is the collaboration that focuses on enhancing partnership globally. So overseas partnerships in terms of exploration and mining. Having said that, there are three pillars, as I was saying earlier. One is focusing on domestic exploration. Second, strengthening our partnership with resource-rich nations and technology-advanced nations like Australia, Japan, and Korea. Along with that, the third is stockpiling and fourth is recycling. So yes, stockpiling will be very important. And in fact, this ban gave us a huge example of that the EV and the auto industry had supplies only till July. So from April to July, since there were no supply, they were impacted. If we had like a stockpile policy in place and some stockpile of these minerals existing, we could have bypassed such long-term impacts of dependencies on one country or another. A number of global nations like US, Australia, and Canada are also now developing their stockpile policy. So I think it's a great opportunity for India to develop their stockpile policy along with having negotiations with other nations.
Saloni, when we talk about critical minerals that are critical for industries like the EVs and the defence sector, what critical minerals should we be talking about, and what should be the policy objective from a definitions point of view? Because there are a whole host of critical minerals out there for a whole host of applications. Should India be prioritising some above the others?
Absolutely. And there have been a number of studies undertaken to identify like what are the key minerals out of the like 30 critical mineral list India has, which are useful for development of the clean tech in India. And according to us, the key 5-4 are one, lithium, cobalt, nickel, copper, graphite, and rare earth elements. So these 5 minerals form like the fundamentals of developing the clean tech industry. And unfortunately, India depends a lot on different nations for import of these minerals. In fact, for lithium, cobalt, we are like 100% dependent on other nations for import. So yes, going forward, we need to develop domestic capacities for these minerals. Along with, I think, as I said earlier, establishing partnerships with countries who have these resources, and better offtake agreements can be developed to ensure that there is collaborative approach. I think one thing I really want to highlight is for each and every country to diversify their critical mineral supply chain, along with ensuring national security, we'll have to move forward from a protectionist and isolating approach where we just want to like keep minerals to ourselves, but
Yes.
a more collaborative approach, because we are well aware that each country has their own strength in terms of resources and there will be dependencies going forward. The only key caveat being that these dependencies should be diversified with a win-win situation for each and every country.
Are there preferred strategic partners, though, for India if it is to build long-term critical minerals security, Saloni? We mentioned Australia, Japan and South Korea. There are still residual let's be diplomatic about this, trust issues, I suppose, between India and China. So can we talk about preferred strategic suppliers for India on the international stage?
Absolutely. So there's no deny of the fact that in the short and medium term, there will be dependency on China. Because we understand the huge capacity the country has and their existence of monopoly. So yes, there is a need for much more diplomatic enhanced relationships with China. So diplomacy continues to be crucial there. But along with that, there are other resource-rich nations like, as I mentioned, Australia, South America, Indonesia, which have a lot of these minerals existing in their grounds, and they are also actively looking for opportunities to diversify their supply chain. So there is an opportunity for nations to collaborate on the mineral exploration. The second component is in terms of the refining and processing. A great example here is Japan. Even though Japan does not have any resources of these minerals, it is in the last few years coming up as a country who exports the maximum copper cathodes. India imports a huge percentage of its copper cathodes from Japan. And the reason for that is because the country has been able to establish their domestic refining and processing technology. So partnership with countries that have the technology in terms of technology transfer could also be a great strategy for India.
Saloni, we'll leave the conversation there. It's a fascinating one. Thank you very much indeed for your analysis and insights. Saloni Sachdeva-Michael there from the Institute for Energy Economics and Financial Analysis. We're back in 2 minutes. Welcome back. Intel is getting a lifeline from Japan's SoftBank. This as the US government is also eyeing a 10% stake in the chipmaker. Lin has more on that story and joins me now. Hi, Lin.
Hey, Sri. So there's a lot of moving parts here because yesterday we had SoftBank announcing this $2 billion investment into Intel, and overnight we got confirmation that the US is indeed speaking with Intel for a deal, and we're learning more details about that as well, that they're looking at a 10% government stake in exchange for cash grants which were approved under the Biden administration via the CHIPS Act as well. We heard from the Commerce Secretary Howard Lutnick, and he basically said that the US wants a return for the, quote, investment in the company. Let's take a listen.
America should get the benefit of the bargain. I mean, that is exactly Donald Trump's perspective, which is, why are we giving a company worth $100 billion this kind of money? What is in it for the American taxpayer? And the answer Donald Trump has is, we should get an equity stake for our money. So we'll deliver the money, which was already committed under the Biden administration. We'll get equity in return for it, get a good return for the American taxpayer. Instead of just giving grants away, Donald Trump views we should get benefits for the economics that we put out. We want Intel to be successful in America. Okay? We'd like an American transistor built in America, right? We'd like an American to be doing that. So Donald Trump says, hey, look, let's turn the money that Biden was going to just give away and turn that to equity for the American people. Yes, it is a worse deal than giving it away. But when you put this money in the hands of Donald Trump, you're going to get a better deal for the American taxpayer. That's who Donald Trump is, and it's obviously the right move to make.
Now, he did say that in terms of that particular interest, we are talking, and they are thinking about non-voting stake here. They're not interested in gaining any control of the company. But we're seeing this pattern of pretty unusual structures, whether we're talking about the golden share in Nippon Steel, whether we're talking about the cut of 15% that some of these US chip makers now have to give to the government in order for some of those China sales as well. So that's something that's worth bearing in mind. We also heard from the Treasury Secretary Scott Bessent as well. He weighed in and he basically said that this is a deal that is focused on trying to stabilize the state of affairs for Intel, and that they would not be getting US companies to buy chips from Intel. Similarly, when we think about SoftBank as well, certainly the investment, but reportedly there is no interest in terms of trying to gain a seat on the board. There is no commitment in terms of buying Intel chips as well. And that there lies, I think, the key here, because for Intel, certainly they would be welcoming the endorsement, the vote of confidence, the funds, etc. But what they need, particularly in the here and now, is customers as well as more sales. And neither of these deals, potential deals, would be providing that. Now, from the SoftBank side, we are also learning more as well, with some reports that suggest that in the weeks prior to the announcement that SoftBank was in talks with Intel to potentially buy that foundry business as well. So a number of watch points.
It looks like semi-nationalisation or even stealth nationalisation is the new normal from the Trump administration these days. Lynn, thank you very much indeed for that. Coming up on the programme, ChatGPT Go is now live in India. We'll tell you all about OpenAI's cheaper India-only subscription service after the short break. Stay with us. let's take a look at cryptocurrencies. This is how they are performing. We are seeing a fair degree of risk aversion, actually, in the equity markets in our region. It's not quite translating into the cryptocurrency arena. Bitcoin trading out to 113,588. Crypto moves came after a sharp decline in tech stocks stateside as investors go into risk-off mode, part of that coming from worries around an AI bubble. An MIT report claimed 95% of organizations are getting no returns from their AI investments. OpenAI founder Sam Altman also hinting things may have gone too far in the AI boom. Altman comparing today's situation to the dot-com bubble of the late 90s in a Verge interview and cautioning investors may need to brace for disappointment. Let's switch gears now to India. The country is planning to ban online games played with money. A new bill says no one can offer or promote such games, warning of psychological and financial harm. The proposed law, seen by Reuters, could deal a big blow to the multi-billion-dollar industry, including giants like Dream 11. That's valued at nearly $8 billion. The government says these games use manipulative, addictive features, and anyone offering them could face up to 3 years in jail. Heavy penalties there and a heavy regulatory touch for online gaming in India. Speaking of addiction, a lot of people could say they're addicted to chatbots. Meanwhile, OpenAI is looking to get deeper into the Indian market. The company has launched a new India-only plan for now called ChatGPT Go, priced at just 399 rupees a month. That's around $5. It is ChatGPT's most affordable plan yet and offers 10 times more messages and images than the free version, plus faster responses. India is OpenAI's second largest market after the United States, and Sam Altman says it could become the biggest soon. Let's talk more about this with Neil Shah, Vice President of Counterpoint Research, joins me now. Neil, welcome to the programme. So if this is a more affordable plan to access ChatGPT in India, is this AI for the masses then?
I think it will definitely democratize to the extent because most of the free version is quite limited in capabilities, and pro version is quite expensive beyond the reach of the normal Indian users and even some enterprises. It's quite expensive. So I think this definitely democratizes and increases the addressable market for OpenAI. And I believe if you look at all the different players in the applications market, like from Netflix to Disney, and everyone has a special India pricing to attract the masses. And we have seen this being very successful strategy. And this is taking leap out of the same booklet and trying to democratize it.
Does this bridge the digital divide?
To some extent it does, but I believe it requires still the adoption, and adoption can come only with clever go-to-market strategies. Just by dropping price is not enough. So you need to partner with some bigger go-to-market channels. For example, how Perplexity partnered with Airtel and gave 1 year of Perplexity Pro for free, right? So that is getting people hooked on because Airtel has access to 350 million smartphone users. So India is full almost 600 million plus smartphone users in the market, right? So it's a big market and the biggest market outside of China to access.
Understood. So the Perplexity Airtel model is a template that could work in India. So if this is at a low price point, Neil, ChatGPT Go, then to your point of adoption, what do you think adoption rates are going to look like over the horizon? Are Indian consumers going to go for this?
I think at some, you'll see those who are, first of all, Indian consumers are pretty young. And if you see average age for 60% of more than population is below 30 years. So, and all of them are going into this AI boom and using AI for different perspectives and different work as well as for personal gains. And so I believe the adoption curve would be quite good. But again, it will still require some more clever go-to-market strategies from OpenAI to make it even more accessible. And once they have it more accessible, I think they can use the data from millions of users to train its model and which will then give a flywheel effect for them to have more localized models to sell it to enterprises.
So where do you see the applications, Neil, for ChatGPT go in India and for AI more broadly? Is it going to have a material impact on driving productivity and efficiency in business and industry? Or do you see its role better suited to critical public services like education and healthcare?
I think that's a great question. I think, first of all, it will start with enterprises. And we are already seeing enterprises, many enterprises, small, medium, large, are working on different open models and trying to figure out their AI strategy. And definitely productivity is the lowest hanging opportunity here for enterprises and for individuals as well, whether it's basic application like writing, editing, or search. I would say search is the second largest I would say hanging opportunity for enterprises as well as for consumers. For consumers, it's more of a starting, they might start search in the next 3 to 4 years within the ChatGPT type applications, not on the browser, right? So I think that is something which is going to be the most useful. And then you go to verticals where you use the models, train them on the data, and then democratize it as well as localize it, which can benefit the verticals.
Well, that localization is a gargantuan task, isn't it, Neil? How does ChatGPT and similar AI platforms overcome what is one of the biggest challenges in India, which is not, you and I know, a monolithic market, because there is a sheer breadth and diversity of local languages? Exactly.
Every 200 kilometers, language dialect changes, right? And the cuisine as well changes. So I think it's a big task, but the point is the sheer scale. So if you have the right partner to get the adoption going, you get so many millions of queries a day. And based on that, you can fine tune the model and see where it is hallucinating, where it is not, right? And you can train the model. Okay, these type of questions which are coming in, and the data which is given is not accurate or can be more accurate, right? And then they have to work with local bodies, local dialects, and also local organizations to train the model based on local news as well as local, I would say, knowledge base, and that will drive. So it's more of a full round 360-degree effect, 360-degree strategy, which different models will have to take, apart from just amassing queries from billions of users in India.
So where then is India in developing its own homegrown AI?
So so from foundation model perspective, obviously it's not going to be easy because we don't have that much of infrastructure invested by any bigger giant to build our own foundation model. So what they will do is essentially take open source models like DeepSeek or Llama and build on top of that. And that is what is happening right now, where there are a lot of AI startups which are taking indigenous languages or local languages and using the base foundation models from outside and then training them, fine-tuning them with Indian languages and Indian scripts and everything, and then using it for local applications. So that is what is happening at this point.
And how challenging is this issue of data sovereignty, storing, processing and protecting what is sensitive data, Neil, from potentially millions of users?
Yeah, and the warfare, the geopolitics has changed the game completely, and data is considered to be the new oil, right? And information is actually the crude, which is driving all of this, right? And so it's going to be super important from a data sovereignty point of view to protect the data. And we are due, from India perspective, we are due for a data protection bill, which was scrapped a couple of years ago. But with all of this AI coming in, policymakers are still grappling on where to draw the line, or where they can control the models, where the data needs to be stored, and so forth. Because There's so many models. What is the feedback loop? Is the data being shared outside of India? So all of these needs to be taken care of in terms of a policy, a stronger policy, because every nation will try to protect their data.
Exactly. So this means protecting sovereign data means India does need to enact tougher laws when it comes to data protection.
Absolutely.
And where do you think government and legislators are on that? Do you feel, Neil, that they are perhaps behind the curve when it comes to protecting sovereign AI?
I think they're still in the early stage of discovering because still AI is still in the nascent stages. So they have some breathing room at this point, but it can spike really fast. And it's very critical, and they're taking it step by step. It happened the same way when the smartphone boom came in India in 2012-13. It took them 3 to 4 years to discover there are a lot of applications which are with the data is not staying in India but going outside, and then they came up with the data protection bill. So I think it's a learning curve for policymakers. They have a lot of other things on priority. This is slightly lower on the priority at this point, but it will move up on the priority list quite soon.
Neil, excellent conversation, and it's a fascinating topic. Fascinating to see how it all unfolds. Thank you for that analysis. Absolutely. Neil Shah there from Counterpoint Research. Right, we are counting down to the market open in Mumbai. We're back in 2 minutes. Welcome back. Let's take a look at the Indian markets, which are in the pre-open session. Nifty 50 is primed to kick off at around this level of just below 25k, 24,965. There is, let's face it, a fair bit of negative news flow as regards the India-US relationship and the prospect of a trade deal, the prospect of an additional 25% tariff being levied, which will take us to 50% come August the 27th if there is no progress in terms of the punitive tariffs and withdrawing that. So the externalities are not looking too good at the moment. Let's give you the exchange rate too. Dollar rupee at 87.094, and a weaker rupee has been part of the problem as well. and that's been a consideration for the Reserve Bank of India. In the meantime, the Indian government has set a target of making the country a developed economy by the year 2047. To achieve this, the Finance Ministry says growth must average 8% annually over the next decade. India's growth for this financial year projected between 6.3 and 6.8%, broadly in line with last year's 6.5%. Ministry also told lawmakers that boosting investment and strengthening domestic demand will be crucial, but trade tensions remain a risk, with a steep US tariffs on Indian goods and Russian oil purchases expected to weigh on growth. Let's get more on this and try to understand what all this means for the benchmarks and the markets and macro. Ashutosh Tiwari joins us now, Managing Director of Aquarius Securities. Ashutosh, how challenging then is the short-term outlook for India's markets?
I think valuations are a bit on the higher side right now. If you look at the large caps, but it's not very high. But obviously the valuations are more in case of small caps in India right now. And with the US tariff uncertainty of around 50% right now, from 27th, that remains a challenge. So we think that in the near term, I think markets would probably remain kind of stagnant without much direction. But having said that, government has talked about cutting GST rates before festivals. That could boost the demand in domestic market. And India still remains a large domestic consumption kind of economy. So that would be a bit positive, which can come through in the next few months.
Ashutosh, it seems Mr. Navarro, Mr. Besant are doubling down on the US position towards India, which unfortunately seems to be consistent with 50% tariffs come August the 27th. Are you expecting that scenario to unfold, and how should we price this risk?
So as of now, I think it's difficult to say whether it will go to 50% on 27th or not. But as of now, as per whatever media report that we also have, there is no progress in terms of negotiation. So maybe over a short or near term, basically, duty could be on the higher side. And that would impact our export to USA to some extent. But see, I think a lot of product segments like pharma and all, where India is large exporter to US, is out of that tariff of 25% plus 25%. So I think there will be impact, but it may not be very large in the initial period.
Ashutosh, we effectively got a form of stimulus with the overhaul to the GST regime. Do you see it that way? And how much positive momentum can that cause, can that affect in the broader market, especially amongst the consumption plays? And do the financial authorities and do the monetary authorities need to do more, given the balance of risks externally and domestically?
So I think consumer discretionary demand in India has been under pressure. If you look at last 1 year and a half year period, if you look at passenger vehicle sales data and all, they have not been growing. Even the other discretionary items also had not been growing much. So I think GST cut can give that a boost for sure. And it will be positive. I think demand can revive from festival time in urban pockets in India. But right now, I think India's story can be played better to rural consumption stocks, because rural income definitely have been on an uptrend over last 1.5 years. And that's why if you look at commentary of different companies also across sectors, rural demand is better off right now. I think that's a theme to play in India, in my opinion, for next 6 months to 1 year period.
I see. Thanks for that, Ashutosh. And just if we can circle back to the earnings parade, were you as disappointed as Dalal Street apparently was with quarterly earnings season? And how does that change the investment narrative for you?
So I think it was a soft kind of growth, because like I said, that urban demand is under pressure. But we think that rural consumption will drive the earnings growth in the second half. And even urban demand, if GST rate cuts come through, can start improving in, say, from third quarter. So we think that third quarter earnings would be better off, and that's the time probably when you start seeing good momentum in the earnings growth versus last year.
Do you think this is a market that gets a boost from the upcoming festival season? And what do you think that is going to tell us? And is that going to indicate that the Indian consumer is in relatively robust form, or is it going to give the markets cause for concern?
No, I think that one thing is very clear. After like 2-3 bad monsoons over 21 to 23 calendar years, last year was good monsoon. This year also things are looking pretty good. So rural consumption is definitely one segment, and companies who are focused towards that will definitely see good demand growth in festivals and beyond that as well. Urban consumption also, we think that could start reviving from festivals. So I think this time around, festival will definitely cheer the markets, in our opinion.
Banks, financials, that seems to be the consensus place to be, Ashutosh. Would you share that view?
So we are more positive selectively, not across the board. In financials, I think some of the NBFCs are better off today. And some large banks who have not done well in the recent past. But if I have to play it, right now, the markets will probably be more overweight on autos, which is primarily on two-wheelers over there. And then we consumer discretionary stocks and all. And cement also would look good.
Ashutosh, it's a fascinating realignment that we are seeing geopolitically and geoeconomically in an environment where India and the US relations are deteriorating. Wang Yi is meeting Prime Minister Modi. Prime Minister Modi is going to be attending the Shanghai Cooperation Organization event in Tianjin next week. Is this a dynamic that the markets should follow and care about? And just how investable is it as a theme?
I think it's just a small change in stance from earlier in terms of our relationship with China. We have to observe how this goes through, and also we have to look at how the next few months this tariff thing plays out with USA. So I think it's very difficult to say at the moment how this exactly is going to play out. But yes, I think the partnership with Chinese companies can improve over next maybe few quarters, which was actually not so good over last 2 years. So that could something which can happen. And that will be a bit positive for India. But yes, I think more important is the relationship with North America, USA right now.
Yes, and in terms of closer India-China relationships, there are sectors within the market that could benefit from this, from AI, EVs to hospitality. Ashutosh, how are you? I mean, we're mired in the clear and present danger of the tariff relationship with the US. How is that impacting? And I know that there are sectors that have been exempt, but in aggregate, how is that impacting, and how do we position in IT services, in pharma, in the automakers?
So pharma so far is kind of exempt from this tariff, so we don't see much impact on pharma per se. IT also is not impacted directly, but if the US growth slows down, there could be some impact. Right now, the growth rates for IT companies are not looking good, and they also an impact of AI. So I think IT is not a sector that we are very positive at the moment, negative to neutral over there. But auto is something we are definitely very positive. Domestic demand, as I said, that is looking decent over the next coming months, especially rural. So I think that is a sector definitely worth looking at. But yes, we have to avoid the stocks which are more focused on exports. I think auto story in India right now is more about domestic consumption and the companies which get to do that.
Ashutosh, AI is such a double-edged sword, isn't it? Thank you very much indeed for that. Ashutosh Tiwari, Managing Director of Equirus Securities. Now, on a personal note, on a personal message to you, dear viewer, this is my final broadcast at CNBC, and I will be drawing the curtain on a 20-year career in financial media. I've seen a few economic cycles in that time, and I've been tremendously honoured and privileged to work with a dedicated team of inspirational journalists, bookers, producers, directors, editors, and camera operators and technicians. And together, it's their collective efforts, skill and vision that delivers this exceptional content on air and online every day. And thank you to you, the viewer, for your kind words, constructive criticism, engagement and support. On that note, that's all the time that we have today on Inside India. Do keep watching CNBC. I'm going to hand over to my good friend and colleague, Dan Murphy. Access Middle East is up next.